Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 31st of October. And happy Halloween for all the crazy Halloweeners out there. Now, let's just have a look here at the key theme going through the market as we come into the Asian session, right? Now, the Japanese yen rises to two-week high versus the dollar. And this is because we got the BOJ interest rate meeting today, right? And every time this comes up, especially since they've been talking about, the value of the yen, which, don't forget, really does suit the BOJ at these levels, makes the yen and all the yen exports a lot more attractive, but they've got to be seen not to be supporting a weak currency, right? So there's a couple of things to consider, but the actual, if you have a look since July, right, this thing has gone from, it hasn't been too far, like 138 up to 150 odd. But now this is where the pressure situation comes in, right? Because it's broken down methodically through this support level. Now, it's not like the be-all and end-all support levels by any stretch. We've seen this thing slowly drifting. You've seen a couple of big, I think this is around the last meeting, or a bit of a spooked market where you can see it jump down a couple of hundred points and then ricochet straight back. But the fact is that the yen is trading around 149. There's no support at these levels, no real resistance. If anything, you are flying by the seat of your pants and you're looking for some like announcement from the BOJ, right? So, and you know what the hard part about this is? Let me just get the calendar over there. It's because the BOJ, right, unlike all the other central banks, these calendars do give us a bit of a time around when the BOJ are going to make an announcement, but generally there's no set time for the BOJ. Right, they go in, have a meeting, they come out, discuss it, and then make the announcement. So it can be around this time, but don't hold your breath. Usually, traders have to sit by the screens and wait for the announcements to come out. Right, but leading into that, so the yen and the yen crosses are definitely a major play. Right. Actually, while I'm here, I'll just talk about the yen first. If you come in and have a look at the yen, right, and I'm looking at the hourlies here. You can see, there's already a bit of a move back down. Like Euro yen hasn't broken down yet, but sterling yen's on edge. Aussie yen's coming into the cloud. Kiwi yen and CAD yen all lower, right? So looking at the hourly charts, it looks like a bit of a dog's breakfast, but you can see sort of generally that the market's anticipating something. How can we make this better? Well, check out the yen crosses on the dailies, right? And don't forget, this is a structural change. So you will have a significant move if the BOJ did do something. And you've got very clear trend lines here, like an Ichimoku, Ichiban strategy there on the Aussie yen, sterling yen, Euro yen, CAD yen, and Kiwi yen, right? The only thing that's really still up here is dollar yen. But it's got a bit of a way to go before we break down through the cloud. So on the dailies, I can tell you any sort of change of BOJ policy, which I don't think they'll do while the dollar's strong, but I've been known to be wrong. You're going to get a really nice technical breakdown here through the cloud, through the trend lines on a lot of these instruments, right? It's almost worth putting a bit of a small position, maybe just a break trade on a couple of them in anticipation, right? I'd have like a 50-point trailing stop, because if it does shoot down, you don't want, last thing you want to do is hold the position and then have it ricochet on you. But I tell you what, the yen crosses, if you haven't already checked these out, have a good look. As I said, particularly on the hourlies, right? Now, let's just have a look what else is happening through the course of the day. You've got the earlier numbers, the retail sales, unemployment figures, industrial production numbers out of Japan. Will they set the tone for the BOJ? Not really, right? I don't expect any significant shift in the data. We've got some ANZ business confidence numbers out of New Zealand. Housing credit in Australia, that's like I wouldn't be holding the breath for that. The Chinese data, though, has been impacting both the Aussie and Kiwi, and it has been sort of shifting around. We had a whole bunch of weak data, then all of a sudden, whether the Chinese officials have been tweaking the numbers, all of a sudden, everything picked up, right? Always smells a bit funny, but you can't do much about it. And then as you come through the rest of the day, obviously the BOJ. Then we come into Europe, the Eurozone GDP numbers and inflation numbers. Keep an eye on that, right? they can impact it at the weirdest times, especially if there's significant variance in the numbers, right? CAD GDP, and then you start to scroll down here. Let me just clear that screen there so I can get it down. And then you come into the North American session. As I was saying there, the CAD GDP numbers, the S&P Case-Shiller home price numbers has always been a good historical number for the dollar. Consumer confidence, obviously, also there as well. And then you've got the Kiwi employment numbers there at the very end of that North American session, right? So big day. Like the whole week is chock-a-block full of data. But the key thing that most, like where the big move is revolving around, it's around the central banks, right? And today it's the BOJ's chance to shine. And then you can piece together what happens around the euro and the dollar with these other releases. But you know what? We've got the Fed coming up, the Bank of England. It's a big week. Don't put all your eggs in the one basket. Just be aware that the BOJ is on. I was having a good look at this, and you know what? Let me just change screens here for a second, because I like to sort of look at a lot of different angles and see what's going on. I don't see a huge shift in the risk reversals, yen risk reversals here, right? 3 month, 1 month. Okay. There's not a huge amount of anticipation, maybe a little bit, but you know what? Outside of that, I think it's going to be business as usual. The market gets into a frenzy, as I said, around these core BOJ events, especially when they're sort of threatening, we're going to intervene. I'll tell you what, the traders who have been around a long time aren't too concerned about the BOJ, right? It's not a scare factor. They used to rip the market's head off years ago, 20 years ago. Now they're back in the box and a little bit more contained. So let's just come across to the core market. Now, just keep an eye on things as we go through the session. Obviously, what screen am I on here? Sorry. Come over here to the big major page. The core thing we're looking for is just keep an eye on the US Treasury yields. They have been sort of knocking things around a bit. At the moment, we've got a bit of a risk-on scenario with the North American equities, and that's shining through on most of the currencies. Euro, sterling, Aussie, Kiwi down. You've got the dollar index, Swiss, yen, and CAD up, right? That's the core risk-off profile. So if you trade in the Asian session, that's the current direction. As we come into the European and particularly the North American session, that's when the bond market will start to have a more of a dominating influence, especially around the US releases, right? And that's pretty much it, guys. The yen, the one to watch through the Asian session, and then switch over to the euro, GDP numbers, etc., inflation numbers, and then we'll tap into some US numbers before the Fed on Wednesday. But as I said, just try and keep calm around this BOJ announcement, because there's nothing we can do. And liquidity at the time, because the instrument or the major currency like dollar yen itself, right, it is in the middle of nowhere. It's going to be loose. If anything, you'd probably have a stop loss entry here about 60 points below the market. That's what I'd be saying. Have a tight, maybe 30 to 50 point trailing stop. Maybe you get if they do something or the market gets spooked, you get into the trade around the level that you chose and you hold the position, and your trailing stop kicks you out if it retraces, right? As I said, just with the dollar strong at the moment, I don't think they can do it, because it'll be a waste of money. They'll get a big move down and it will ricochet back up. But that's my $2 worth. All right, guys, that's it from me. If anything else, just keep an eye on the instruments, right? The Fed is obviously a much bigger event. It's going to impact a lot more instruments, and you're going to have a lot more know-how around hitting these things. And we do have trend lines building here. The pressure's building both sides of the market for most of these major currency pairs. So keep an eye on those as we go through the next 24 hours. All right, guys, have a good one. All the best. Cheerio.